This is another podcast from Alpha Business Media. Welcome back to the Deep Dive. Today, we're plunging into a topic that's, well, it's really top of mind everywhere. The future of physical bank branches in this world that's going digital first.
Yeah, it's a huge question, and we've got a really interesting way to look at it today, using a report you shared analyzing this exact situation in Nepal. It's a fascinating case study, isn't it?
It really is. Nepal's banking sector is transforming so quickly. So our mission for this deep dive is pretty clear. We're going to unpack this report. We want to understand, are physical branches still necessary there? What sort of challenges are they up against? And crucially, how do they need to change?
Right. We'll be guiding you through the key insights from this material.
Exactly. And the backdrop is this rapid digital shift in Nepal, but as the report makes clear, digital first definitely doesn't mean digital only. Not yet, anyway.
Not by a long shot, especially when you factor in culture and infrastructure realities.
Okay, so let's dive in. First up, just how fast is Nepal digitizing? The report starts with some numbers that are pretty staggering.
Oh, absolutely. The momentum is incredible. Take mobile banking users by March 2025. That number shot past 27 million.
Wow.
Yeah, and think about this. It was around 9 million active users in early 2024. Then jumped to nearly 25 million by mid-July 2024. So that leap to over 27 million by early 2025, it's really rapid acceleration.
That's phenomenal growth in, just over a year? And it's not just mobile apps, right?
Not at all. You've also got internet banking, over 2.1 million users there. And digital wallets are huge. Platforms like eSiwa, Kalti, IME Pay, they're part of daily life.
Right.
Total wallet users were over 26 million by April 2025. eSiwa, which was kind of the pioneer, has over 12 million downloads. Kalti and IME Pay, they're both well over 5 million downloads each.
And the report really flags the QR payment boom.
Oh, yeah. That's explosive.
Yeah.
Volume growth averaging 230% a year. Value growth around 210%. They transacted something like NPR 500 billion via QR in the 2023-24 fiscal year alone.
500 billion. That's massive. And there was that one example, PhonePe.
Yeah, exactly. PhonePe processed over 1 million QR transactions, worth about NPR 2.6 billion on a single day. Back in March 2025. That really feels like, a tipping point for everyday digital payments.
Mm-hmm. It really does.
And you have to give credit to the central bank, Nepal Rashtra Bank. Their digital payment strategy, things like the regulatory sandbox they set up, that's clearly helped push things along.
Okay, so picture painted. Explosive digital growth. But here's where it gets really interesting, and the report digs into this. Those big numbers, they hide a pretty significant digital divide.
That's the crucial counterpoint. Those headline figures are exciting, sure, but they don't capture the full picture across the country. The gap in digitalization between, say, Kathmandu Valley and the rural areas is, it's stark.
How stark are we talking?
Well, internet penetration in the valley is high, maybe around 80% of households. But you go out to the rural areas and it plummets to something like 17%.
Wow, only 17.4%. So access itself is a major issue outside the cities.
Exactly. And even where people do have access nationally, it's over 80%. The report highlights that digital literacy levels are still quite low.
Right. Just because you can connect doesn't mean you know how to use online banking confidently or trust it for everything.
Precisely. Access doesn't equal effective use.
Mm-hmm.
And then you layer on the basic infrastructure challenges, unreliable internet, power outages, especially in remote areas.
Yep.
That makes relying solely on digital banking pretty difficult for a lot of people.
So this uneven landscape, the infrastructure, the literacy, it all points back to why branches aren't just vanishing.
Absolutely. They remain essential. They're the primary access point for many and a necessary fallback or preferred channel for certain things for almost everyone.
Which brings us neatly to the next big theme in the report. Why customers still value that physical branch. And it goes way beyond just lacking digital access. There's a cultural element, isn't there?
Oh, very much so. What's fascinating here is how culture and banking needs intertwine. The report really emphasizes personal relationships and trust. For many Nepalese, especially older people, or those less tech-savvy, that face-to-face interaction builds confidence.
It's that human connection.
Exactly. Particularly for big decisions, like a loan or if something goes wrong. They want to talk to a person they feel they can trust.
That makes sense. It's not just about the transaction, it's about the relationship.
Right. And the report touches on something interesting cultural concepts like face saving.
Face saving. How does that relate to banking?
Well, in a culture where maintaining respect and avoiding embarrassment is important, some customers might feel much more comfortable discussing sensitive financial issues, maybe a problem or a complaint, discreetly, in person at a branch.
Ah, rather than sending an email or dealing with a chatbot where it feels less personal or maybe harder to explain nuances.
Precisely. They might feel they can handle it more tactfully face to face. This creates a sort of latent demand for that kind of careful in-person service.
And given the collectivist nature of society there, word of mouth must be incredibly powerful. A good experience in a branch could really drive recommendations.
Huge. A positive personal interaction doesn't just satisfy one customer. It can ripple through their network, which raises an important question. What specific services do branches still excel at, even for people who are digitally active?
Okay, yeah. What are those key services?
Well, think about complex products first.
Hmm.
Mortgages, big business loans, detailed investment advice. These aren't simple clicks. They usually need in-depth discussion, maybe going over risks, getting personalized advice. People often prefer to do that sitting down with an expert.
You really can't replicate that depth easily online, can you?
Not really. Then there's complex problem solving. If you have a serious issue that the app or call center can't fix easily, going to the branch gives you a sense of control, right? You talk it through.
Definitely gives you more confidence you'll get it sorted.
And crucially, financial literacy support. For people with low digital literacy, the branch isn't just an access point, it's the access point. It's where they learn, where they get help, maybe even get guided through using digital tools for the first time.
So it's an education hub, too.
Absolutely. And even young, digitally savvy people, when they face their first big, complex financial need, like buying property or making a major investment, they often still seek out that face-to-face expert advice for reassurance.
So branches serve complex needs across the board, not just filling the gaps left by digital exclusion.
Exactly. The human element, handling complexity, building trust culturally, these are still very powerful drivers.
Okay, let's talk about the network itself. The report says it's already pretty extensive in Nepal.
It is. We're talking over 11,500 branches of banks and financial institutions combined as of early 2025. Some of the big commercial banks, Global IME, Nabil, NIC Asia, the state-owned National Baniji Bank, they have huge networks, some nearing 400 branches each.
And wasn't a lot of that driven by a central bank policy for financial inclusion?
Yes, that was a major push by the NRB. They set a goal to have at least one commercial bank branch in every single one of the 753 local government areas by 2025.
That's ambitious. How did they achieve that?
They used a mix of things, mandates, rotations, even lotteries, to assign banks to specific areas, plus incentives, and largely it worked. It dramatically expanded the physical reach of banking services.
That's impressive. But maintaining such a huge network, that must come with its own set of headaches, especially now with digital growing so fast.
Absolutely. If we connect this to the bigger picture, running all those branches is expensive. You've got rent, staff salaries, security, utilities, high operating costs.
And as people do more routine stuff online.
Exactly. As basic transactions like deposits or transfers move digital, the foot traffic for those things in branches drops, which makes that traditional transaction-heavy branch model less and less cost-effective.
So you've got this expensive network that's seeing less use for its original main purpose.
Right. And profitability is a real issue, especially for rural branches. Lower population density, fewer transactions. But banks often have to keep them open due to regulations, even if they're losing money.
That's tough. What other challenges does the network face?
Well, we mentioned the infrastructure issues in rural areas, patchy internet, unreliable power. That makes running even basic tech in those branches hard.
Right. Your smart branch isn't so smart if the power's out.
Exactly. Then there's cybersecurity. As everything gets more integrated, the risks increase. We've seen incidents in Nepal, and banks need to constantly invest in security, which costs money. Finding the right staff is another one. You need people who are tech-savvy, knowledgeable about complex products for advisory roles, and have strong interpersonal skills. It's a different skill set than the traditional teller role.
And cultural factors within the banks.
Yeah, the report mentions potential internal challenges, like bureaucratic processes or the Afno-Manchi culture sort of favoring personal connections, which can sometimes slow down needed changes.
And the report also flags the issue of non-performing loans, NPLs. They seem quite high on average. How does that fit in?
That's a major constraint. The average NPL ratio for commercial banks was nearly 5% in late 2024, early 2025. When NPLs are high, it eats into profits and capital.
Which means less money available to invest in transforming the branches.
Exactly. Transforming branches, upgrading tech, retraining staff, redesigning spaces. It all requires significant investment. High NPLs put a squeeze on that, forcing banks to be more cautious, maybe delaying projects. It also indirectly relates back to branch quality. Good advice and assessment in branches can help manage loan quality down the line.
So it's a complex mix. High costs, changing usage, rural viability, infrastructure gaps, security risks, staffing needs, internal culture, and financial pressure from NPLs. It paints a challenging picture for the traditional branch.
It does, which leads directly to the report's central argument. Branches aren't going away. Branchless banking isn't feasible there right now. The future is about radical transformation.
Okay, so if closing them isn't the answer, what does this transformation actually look like? The report talks about the smart branch.
Yeah, and the key idea of the smart branch isn't getting rid of people. It's about using technology smartly to free up staff, improve the customer experience, and enable higher value interactions.
Like using machines for the simple stuff.
Exactly. Things like self-service kiosks or SSKs. The report mentions NIC Asia Bank using them for check deposits, statement printing, freeing up tellers.
Ah, so you handle quick tasks yourself, which means less queuing.
Right. There's also potential for things like video banking or interactive teller machines, ITMs. These can connect customers in the branch to remote specialists for specific advice, maybe mortgage experts or investment advisors, without needing that expert physically in every single branch.
Interesting. And AI.
AI and machine learning come in too. For personalizing offers, analyzing customer data to understand needs better, or powering chatbots for quick support.
Yeah.
Naval Bank is apparently using an AI chatbot, plus things like biometric authentication for security or digital document submission to speed up processes.
But the report makes a strong point. Just dropping Silicon Valley tech into Nepal won't work. It needs adaptation.
Absolutely crucial point.
Right.
Interfaces need to be super intuitive, maybe available in Nepali, potentially with voice support for people with lower literacy. Given the infrastructure issues, you need reliable backup power, maybe some offline functionality for core services.
And the tech has to support the human interaction, not replace it.
That's the key cultural adaptation. Because that personal trust, built face-to-face, is so valued, the tech needs to enhance the relationship, free up staff for meaningful conversations, not create barriers.
So the tech changes, but the human element remains central. How does this change the actual purpose of the branch then?
It's a fundamental shift. Branches move away from being just transaction processing centers and become more like consulting hubs. Places you go for that expert advice on complex things, mortgages, business loans, investment.
And education centers, too, you mentioned.
Yes, crucial financial literacy centers, hosting workshops, providing one-on-one education, helping people navigate both traditional finance and the new digital tools. That's vital given the literacy gap.
Okay, so consulting, education, what else?
They still handle those necessary complex transactions that need physical presence, maybe for legal or security reasons. And they become really important points for strengthening the brand locally, engaging with the community, building that loyalty that drives word of mouth.
Makes sense. The report also mentioned a universal banker model.
Yeah, the idea there is training staff to handle a much wider range of tasks, from simple transactions to more complex consultations and sales. One person can help you with more things.
Sounds efficient for the bank, but that's a big ask for staff training, surely.
Huge. It really underscores the need for massive investment in upskilling and retraining the workforce. And this transformation isn't just within branches, it's about the whole network strategy. It's not just about cuts.
So optimizing the network.
Right. The report suggests banks need to audit their network performance carefully, pilot different formats, maybe smaller mini branches, dedicated advice centers, even mobile branches for remote areas. Use data analytics to figure out the right size, right location, right services for each community.
Like that U.S. bank example mentioned, Regions Bank.
Exactly. They consolidated several older traditional branches into fewer, more modern, tech-enabled ones that could serve customers more effectively. It's about strategic placement and format, not just blanket closures.
And weaving all this together, the tech, the new roles, the optimized network is this phygital idea.
That's the buzzword, but it captures the essence. It's about creating a seamless, integrated experience across all channels. Physical branches, digital apps, ATMs, call centers, maybe even third-party agents.
So you could start something online and finish it in the branch, and the staff know what you've already done.
Exactly. The customer journey flows smoothly between physical and digital. And the key enabler for that is technology, like robust CRM systems, customer relationship management.
Ah, so the
Uh,
bank has a single view of the customer.
Right, a 360-degree view across all touchpoints.
Yeah.
That allows for real personalization and continuity of service. AI and analytics help make sense of all that data. The report mentions Naval Bank's N-Bank Super App as a local example, trying to do this integrating remote services like account opening or digital KYC to reduce the burden on branches.
While the branches still provide that physical reassurance and support when needed.
Precisely. The branch acts as a physical guarantor of trust, complementing the digital convenience.
Okay, so this whole transformation effort, it's complex, it requires investment. What's the ultimate payoff? The report links it back to two main goals, right? Loyalty and profitability.
Exactly. Those are the twin aims. Let's take loyalty first. In Nepal, like many places, improving the customer experience, CX, is the direct route to loyalty.
And how does this transformation improve CX?
Several ways. Personalization is key. Using that CRM AI data to understand needs and offer relevant advice makes customers feel valued, not just like a number. Convenience and speed are huge, less waiting time thanks to SSKs, faster digital processes integrated with branch support.
And the human touch.
Still critical.
Ah.
Empathy, active listening, effective problem solving by skilled branch staff that builds deep trust, especially important given the cultural context. Transparency and advice, robust security, consistency across all channels, it all reinforces that trust.
Yeah, and those cultural adaptations we talk about, respecting elders, language support, handling sensitive issues well, that must really cement loyalty.
Absolutely. And that generates the positive word of mouth, which, as we said, is incredibly powerful there.
Okay, so that's loyalty. What about profitability? How does transformation boost the bottom line?
It works on both cost reduction and revenue generation. Automating routine tasks via digital and SSKs lowers operational costs, frees up staff time. Optimizing the branch footprint with smaller, more efficient formats saves on rent and utilities.
Right, cutting costs. But you said revenue, too.
Yes, because staff are freed from basic tasks, their focus shifts. They can spend more time on advising and selling higher-margin products investments, insurance bundled with banking, bank assurance, larger, more complex loans. Things that genuinely benefit from consultation.
Ah, so the branch becomes a sales and advisory engine, not just a cost center.
Exactly. Transformed branches are better placed to attract and retain higher-value customers, like high-net-worth individuals or small and medium businesses who actively seek that personalized advice. And with that deeper customer understanding from CRM, banks can do more effective cross-selling and upselling of relevant products.
So it's a shift from processing low-value transactions to generating high-value relationships and revenue.
That's the strategic goal. And the report mentions tracking this with KPIs, not just customer satisfaction, CSAT, or Net Promoter Score, NPS, but also things like cost per transaction, sales volume of complex products per branch, overall branch profitability, and even linking NPLs back as an indicator of the quality of advice and risk assessment happening in the branch.
Okay, this paints a clear picture of the path forward. Let's summarize the key recommendations from the report for Nepal's banks. What are the first steps, and what's the longer game?
In the short term, the advice is practical. Audit your current network, really understand performance and potential. Start piloting smart branch concepts in selected locations to learn what works. Begin basic staff retraining for new skills and technologies. And importantly, improve your existing digital channels based on user feedback. Make them better, easier to use.
So test, learn, improve existing stuff. What about the long-term vision?
Longer term, it's about scaling up those successful pilot models. Building a truly integrated omni-channel platform, likely centered around a powerful CRM. Fostering a culture where staff are continuously learning and adapting. Partnering strategically with fintechs, the global IEM-AGFC partnership was noted as an example. And, crucially, advocating collectively for improvements in national infrastructure, like reliable internet and power, especially outside the main cities.
Where should the investment priorities lie? Where should banks put their money?
The report highlights three main areas. One, branch technologies, SSKs, ITM, CRM, AI analytics, video banking tools. Two, overall digital infrastructure, upgrading core banking systems, improving mobile apps and web security, robust cybersecurity is non-negotiable. And three, arguably the most critical, staff training and development. Retraining for these new advisory roles, developing soft skills, ensuring digital fluency. People are key.
Makes sense. Does the report suggest anything for the regulator, the NRB?
Yes, it sees a supportive role for the central bank. Things like being flexible with regulations to allow banks to experiment with innovative branch formats in pilots, actively promoting financial literacy nationwide, perhaps leveraging the branch network for delivery, making full use of the regulatory sandbox to test new fintech solutions safely. continuing to push for standardization and interoperability in payments, like the QR systems and the national payment switch, and developing clear regulations for new players like neobanks, especially with the government signaling interest there.
And finally, how do banks directly address that persistent digital divide and low literacy?
The report stresses this needs a multi-pronged approach. Banks can run targeted education programs, maybe partnering with NGOs, often delivered through branches. They need to design digital interfaces that are incredibly simple and intuitive with local language options, maybe voice assistants. There need to be wider efforts, involving government too, to improve access to affordable smartphones and data plans. And critically, empowering and training branch staff and banking agents to be educators, to be that human bridge, helping customers understand and use digital tools safely.
Wow, it's such a detailed look, but the core message seems really clear. This deep dive into Nepal really crystallizes the challenge banks face globally, but with specific local flavors.
It really does. The fundamental finding from this report is that physical branches in Nepal aren't dying out, but they absolutely have to change profoundly.
Yeah, the future isn't digital or physical, is it? It's that blend, that phygital approach, where they work together seamlessly.
Exactly.
Yeah.
And for banks in Nepal to succeed in this, the report points to a few critical factors. A relentless focus on the customer, understanding their needs in the cultural context, adapting technology smartly, making sure it fits the local reality, investing heavily and continuously in their people, being flexible and willing to experiment, and having that supportive regulatory environment.
So, what does this all mean for you, our listeners?
Well, it leaves us with a broader question, doesn't it? How will other countries, maybe those with similar infrastructure hurdles or strong cultural emphasis on relationships, balance this huge push towards digital-first banking with that enduring human need for connection and accessible physical support?
And maybe think about your own interactions. How are your banking needs changing? Do you want pure digital convenience? Or are there still times when you really value that face-to-face conversation, that physical branch presence? It's something for all of us to consider.
We really hope this deep dive, drawing on that detailed report, gave you some valuable perspectives.
Thank you so much for joining us for this exploration of banking's future in Nepal. Until next time, keep diving deep.